Good early Thursday morning in North America. Peoples, oh, something happened here to my setup. What happened? There we go. All right. So I got a multi-sheet, multi-charts that I'm going to show you. I'm going to jump around to live trading view, which I'm doing a lot of, then back to some static ones that I have in this presentation. But what the theme is here, we just set up and triggered a massive buy signal for gold and the sell signal for the S&P 500. Now, that'll happen. It's my theme that I've been talking to you about for some time. So the signal is really one about where we've broken out like a 12-year breakout on the ratio of gold stocks versus the S&P 500. That does not mean the S&P 500 crashes. It means simply that gold and gold stocks continue, okay, to outperform the S&P 500. So any of you that watch my recent video that I showed the performance, guys, I look at Patreon channels, I look at content out there, and people are bragging about 15 and 18% gains and they're beating the S&P 500. And people are paying a lot of money for that advice. Well, I'm going to show just, send people to my Patreon. I'm talking about people in 6 months that have made 150% returns. Okay. I know I've made a double, right? 200% in 6 months. But I was in some of those positions a little bit before that 6 month period. And if you don't believe what I'm saying, go take a look in this YouTube channel and go back and look at my playlist in June and July. I think I even put some out in May. I stopped doing all that because I'm behind the paywall. I have a whole lot of different stuff over there. But just go look at that. I recently had three miners that aren't even in gold and silver. They're in another base metal that people bought them in 2 days and they were up 3 days, 120%. So we're performing because we're going where the hot money is. And I'm ferreting out the shifting, right? We all know silver. How can anybody look at the news and not know that silver's flying, right? So what about gold? Gold's setting new highs, but gold now against the stock market set a high, and that's important, really important. We're talking about things that go back 20, 30, 50 years. So let's dive in here. So now I'm going to take you over to TradingView. And I set those up just for this presentation. I like sometimes the live chart. So instead of setting 2, 3, 4 static ones, I can move around in the live ones. All right, so let's take a look at gold. I've been showing this to my Patreon. Sometimes I show you guys on YouTube. The only thing that's different is I don't give away all of my picks, my categories, my sector, my option plays. All those things live in Patreon. And I got to tell you, we're killing it. I'm not only bragging, come over there and take a look. I'm in the process at the end of the month of putting all my testimonials and all this stuff. I practically daily now get emails from people thanking me, thanking me, thanking me, right? So I need to make that site even more professional. I got so much content on there, it's chronological. So you have to study Patreon to understand that you can do collections. It's not playlists. So, pinning posts when new people come in so they can navigate through this 5 months of content. They don't want to miss anything, and I don't blame them. So it's on me. So I've got some help. I'm doing more things. So come over and at least take a look. You don't get a lot on the free side. If I do a video on, right? And people want to feel better. So I got some incentives, some teasers I'm going to do over there for the free. I haven't been doing that. My prices were frankly so low that it was crazy low. They're going up at the end of the month. There's no way I'm going to continue to offer this. Nobody is giving this kind of performance results out behind a paywall that isn't charging 10 times, 8 times, 5 times more than I'm charging. I'm not going to those numbers. I'm just going to a little bit more reasonable number. And I'm going to try and grandfather in some of my people through discounts. Patreon has its own process. All right, guys, let's dig in here. So I've done a lot of gold charting for you. Sometimes Fibonacci, sometimes just chart patterns. Okay, I mix, I go in between. I'm going to show you an Nvidia chart at the very end that I think tells you a lot about the markets. But for now, let's go through this. So, what's gold doing? Breaking out. What's it breaking out of? Well, it's breaking out of this parallel channel. So, what did we do? We were flat, right? Going in the beginning of 25, you know, it was like dead, April to August. So I was telling everybody on my channel all through this time frame, buy the metals and miners. Most of you that watched the channel didn't do anything. Everybody was high yield oriented. Nobody cared. But those that did, that came over Patreon, the ones that joined in August, they're the ones writing the letters telling me they can't believe the returns they've gotten because they listened to me. Other people came in October, and I said, be careful. We're going to pull back. We're going multitudes higher. But if you come in and you buy everything in this time frame, a month later, you're going to say to me, you're full of crap. This is going nowhere. All I did was lose money. I said, you're missing the point. This is a multi-year. This is a generational opportunity for wealth. And that's what I'm going to talk about here, guys. So, never going to not give you resistance, minor, major pullbacks, potential retracements. So, I've been saying before on the old cup and handle at gold, going back quite a bit, that it was measuring up around 5,100 to 5,200. And I drew this parallel channel, right? So we're looking at, this is a 200-day moving edge, this is a 50-day movement. The further you get stretched, look at this. Look how far above the 200-day we were at this point. Now I can put a measuring stick in here, and we're close to that now. But I still think we've got 5,051, 52. Could we go to 54? Sure. So what I typically do is when I see a breakout like this was a little pause, right? I'm looking at dailies, but it was a pause, and I measure up and say, where did we go? I could measure down from this line. There's a lot of ways to do the technical analysis, right? And so with this, what do we do? Now, do we come back in this parallel zone, which still gets us up to 5,000, but it's like February? But more than likely, we extend up and we get to this 5,000, this 52 earlier. I'm sort of calling in general for a sell off in March and probably a low in April, probably at the stock market level and impacting the miners and metals. But guys, if you've never been, and I've been through these, I studied the 1970 to 80. I didn't participate, right? I got out of college in the 70s. I was working. I remember it, but I wasn't a heavy investor. I was in my 20s. I bought my first house. So, but I was doing some stocks then. I was buying some Microsoft, which was a hell of a win for me. But I wasn't. I didn't know about the commodity super cycle. But let me tell you, I played it to the max in the 2000 to 2011, and I never forget all the lessons I learned. I've been waiting for it again. Even though I rode the S&P and a lot of the things that were happening, and then you guys know me from the high yield. And some of you said, man, you started buying about the commodity super cycle, said you got a Patreon. I went over there to see what it was all about. Best thing I ever did. And I got people that came in October and December and said, man, I wish I would have listened and gone over there in August. All right. So I got my most recent 10 bagger. Yeah, I bought it 3.5 years ago at 9 cents and went to 2 cents beginning of 2025, but I knew what I owned. And then when it got to about 12 cents, 15, 18, I started recommending it in my group. It's 85 cents now. I think it's going to $8. So sometimes you got to be patient. When you're early, you have to be patient. It's like capital rotation. But that's not the case so much anymore. We're going a lot higher, and I'm going to show you. Okay. So I do think up here, whatever level it gets to, 5,000 is a tough level because it's a psychological level. Wall Street doesn't love gold. They don't love silver. Why? Because they're not, they compete with treasuries and bonds and the US currency. So the government and the banking system, they're not big on it. So Wall Street controls all that. Sometimes I think Wall Street controls Washington D.C. Street. It has. Its lobbyists have been in the hands of the politicians, but that's beside the point. And that's why the gold and silver and the spoofing and the shortage, especially on silver, existed for so long. Was J.P. Morgan was the front runner, and the government nodded and say, "Yeah, you go, boy, take care of it for us." That's kind of in a critical metal now that's changed the dynamic, and we're in a third paradigm shift with silver, that the old 45-year high of $50, wherever every time it went, 1980, 2011, it crashed down because there was no real shortage of the metal. Well, nowadays there's been 4 or 5 years of shortages, and it's got massively worse. And the more technological we get in warfare with missiles and tracking and the higher levels of GPS and space, and let alone water purification, medical and health, 5G. I could go on. Solar panels, electric vehicles, the new solid state battery that allows you to charge in 9 minutes instead of hours and gives you 2 or 3 times the driving distance that Samsung is doing. Use a hell of a lot of silver. It's a silver anode based solid state battery, no more explosions. So, guys, the silver world has changed. And silver is a dual, it's like somebody with multiple personalities. Silver has a multiple personality. Gold doesn't. Gold's a store of wealth, 5,000, 10,000 years. Silver becomes a proxy for gold when gold gets so expensive. Remember the ratio of $120 not that long ago? Silver is like 25, multiply it times 125, and you get the value of gold. Big Brother always leads. And that's what happened. Big Brother went from 2,000 to 4,000. Silver it wasn't even close to 50. What do you think the inflation adjusted price of silver from 1980 to 2015 or 2025 is? What's up in the hundreds? Even the 2011 49, high 49s, rounded to 50 that we experienced in silver. It's close to 100. So we're only beginning, guys. We're not ending. Sure. I had 88 and 96 as my targets on silver on my charts. And I said nothing would surprise me if we saw 60 again or 125 again. So the next big challenge, we're at 93. We keep challenging that area. We've been 95. Go back to 92 yesterday. We're back in the pre-market up in the mid 93s. It's going to hit 100. I don't know if it's going right now to 120 or 125. We'll see. If it does, we're going to pull back. But that's all it is. It's what all you Mag 7 buyers for the last 12 years, every time you see your favorite Mag 7 in your tech stock, you buy the dip until it doesn't work. And what I'm here to tell you, in the future, it's not going to work. but I know something that is, and it's going to be fantastic and is fantastic. So that's what's happening. Things are changing. Okay. So we got another massive signal triggered that I want to show you. But I'd be remiss if I didn't show my everybody just a chart of gold. So sometimes you take the measuring stick. You can do this all kinds of ways. I can take it from the breakout, I can stick it on the top, but this is just a near term. My guess is we trend on top of this trend line. Even if we come in, it's no big deal. If we break the bottom, that can trigger coming down. And I'd probably have another support level, pretty strong support level of 4,200. But guys, if I draw every line on here, you don't get the theme, right? Simple. And yet I got to show some things in here to indicate what's happening. All right, let's go to the next chart. So I'm learning on trading. There's a lot of things I'm really good at. There's a few things like I did a short-term chart and I put all these labels in. Okay. And then when I want to scroll over to the long term, I can do that. But you can hide labels. But when you use the same gold divided by the S&P, then when you get rid of labels in one place, it gets rid of them both, and I add them back over here. So anyway, long story short, I'm still getting better. I've been using it for a while, but I'm really getting intense about what I'm doing. So I am a lot better at it. So let's show the long-term one because I can tell you because I don't have all my labels in the short one. So the breakout is right here. And when you see this in a really close up, it's pretty obvious. So this is, some period of time, this is like 12 years that we've had this, strength line, if you will, this resistance line. So here's kind of the bottom in here. And so then I measure up, and that gets us up 130, 140 in a ratio. Okay. So a 1.5 ratio, if the S&P 500 stays at 7,000 in another year or two, which wouldn't be, that's kind of where I'm at. I'm at all of a sudden the next 5 years, you got a dead market in the S&P 500 and the NASDAQ. Now, there'll be some individual flyers, but if you think it's going 7,000, 8,000, 9,000, 12,000 in the next few years, I don't believe it at all. It never has in a commodity super cycle. It's where they get a lost decade. Individual performers are there. On my Patreon, I'm going to start covering some non-commodity super cycle S&P 500 and NASDAQ big tech companies with a broad range so you guys can look at some of that and have a balance because you're not completely balanced. I'm 87% in the commodity super cycle right now. But you know what? Can you beat 200%? I'm closer to 250% gain for 1 year in 2025. And I was 87% allocated there. How are you doing? And no, it's not massive risk. If you go out and you find a high flyer and it went up 7 times and you put all of your portfolio in there, I call that luck. Mine wasn't luck. I was spread out over 90 positions. And all kinds of commodities, all kinds of metals and miners from small to mid cap to large cap across the board. Hell, GDX did 165%. Silver did 170%. Gold did like 60%. And then the miners have leverage. So, guys, if you're not understanding this, retail still isn't. I mean, I say third inning, we're getting close to the fourth inning. People are noticing silver. But all you diehards that are still out there buying every dip on the Mag 7, not going to work. All right, so let's get in. So this should move here. This may just be this decade. That's maybe all we get. Well, that's 10,500 on gold. We haven't even re-rated the stocks. Most of the stocks now are based on 2,800 gold, not 4,800 gold. So if we get to 10.5, these stocks are probably going to be 6, 7, 8 times more. And then we can have a retrace, a multi-year retrace, and then I wouldn't doubt that we see 30 or 40,000 gold out into 2034, 2038, numbers like that. I'm not going to care. I'll probably be done at 10,000 gold. I might be done at $250 silver because these re-rated multiples are going to be massive. You wait till February when the earnings come out. But you know what's going to drive that re-rating more than earnings and a high gold price? It's all of the retail investors coming in that realize the S&P and the Nasdaq aren't the growth vehicle for the next 5 or more years. It's an average performance. Up 3% 1 year, down 2%, up 1%, up 0%. And you add 5,000, whatever our number is, and it's at 72 or 78 after 6 years. How you doing then? Especially you guys on margin and leverage and playing all the income ETFs and all the rest. You buy the wrong underlying, you get killed in the income ETFs. You traders know that better than anybody, but not the people that need the income the most are working and they need more income and they can't trade. And they're the ones that buy into these high yield fanboys and all the crap that gets spreaded out there so YouTubers can make more money. They're just giving you the company song and dance and you guys are eating it up because I feel bad about it. I really do. That's why I'm not saying retire on that stuff. I can't stand that stuff. They all interview each other. I'm trying to put together a service that can make you money, and it's happening. Okay, this is my rant, guys. All right, let's get back to it. So we'll probably get up to this last 2011. It was about 1.7, right? But I was saying even at 1.5, gold's 10.5. So where do you want to be? Do you want to be in stocks that are going to really perform? So sorry, this guy, and this was closer, guys. You have to remember this is log scale, and when you move in and change it, these levels go. But this was more like a 1.5, and this was like a 1.7. So what I did here, what we're doing is we're breaking out from 70 cents. This is your 12-year period, right? This is where we've been. And so what is this really telling us? This is gold versus the S&P stocks. Now, I honestly think in 5 years, maybe 3 years, your Mag 7 are going to be gold and silver miners, maybe copper miners, maybe platinum miners, maybe uranium miners. Going to be a different makeup, guys. It's not going to be the same. And that's what they do. They adjust, right? But it takes quite a while for that to happen. But before that happens, there's a lot of wealth made, just like there was in Nvidia and a lot of other massive tech companies. Yes, there's going to be some tech and some, tech energy oriented stuff. There's always a few companies. That's why I want to cover that in my Patreon also. But trying to pick a few, it's difficult and not that hard in the gold and silver and the precious metals sector and then in the base metals. But you guys don't know when to switch. You don't know when to convert. Like I said, I had two different base metals that I recommended stocks that were 100% winners in a week or two. That doesn't happen very often, but it does in this kind of, that would be, I remember back in the 90s when the .com was running and I was in a trading room out in New York in the morning and the internet was barely new and, 94, 95, people were on AOL and getting the disc and all that stuff. And I was listening and we would buy various pharma companies. Oh, this is for brain treatment, brain disease, right? And I'd buy a hot pharma drug 1 day, and 3 days later, I'd be up 150% and flip out of it. And then there was something else. But that whole momentum of all the dot com, now these weren't dot com, but it was during that period. The internet was expanding. And then what was the blow off top? Eyeballs is all that matters. Revenue doesn't matter. Well, that was a big lie. That didn't work. It's kind of like the 2008, 2009, or 2008, mostly the mortgage crisis, liar loans. It eventually comes back and really, really matters. All right, guys. So that's this scenario. So going back, well, this isn't the one, it was the other one. All right, guys. So I'm going to flip now back to my Excel. I will come back to this Nvidia chart because I think it's fascinating. All right, let me get here. So now I got a number of things to show you guys. So by the way, some of where I get my stuff, various places, some of it I build, charts are us is fabulous. Some is behind a paywall. I use that sometimes. Some is free. So go chartsareus.com if anybody cares. You're not going to always find exactly what I have unless you're in the paywall. And then even then, I modify it and work with it. So I showed some different analogs to my Patreon guys comparing past supermarket cycles on the gold and silver price run versus those other super cycles. So now I got a different one that I used to use, and I'm back showing that. All right, guys, gold versus the stock market. So here's a 150-year chart. Now, it's linear, not log. So the difference when you do log method in charting is when you've got a real long time frame, it shortens it. Otherwise, if you're showing something at $1,000,000 and 5 cents over here, there, it's crazy. You can't even see them. So when you go log scale, at least it brings it into perspective. This isn't. It's referred to as linear. So some of these numbers are skewed. But again, this is the gold versus S&P 500. So we're going back. The other problem, honestly, you got to remember gold that was free floating, then it got fixed at a fixed price down here, especially, right? So going all the way back to FDR and then into Nixon taking us off the gold standard. And so now gold's free floating. And here we go. This was the 70 bull run. And what do you have in a typical bull run? You move like crazy. And in a 74 to 76, you had and this wasn't very high, guys. Gold was $200. But when it dropped to 100, that's 50%. So if we go to 8,000, 7,000, and then go back to 4 or 3,500, everybody's like, oh my God, your gold mining stocks may go down 60%, 70%. I've seen it. Usually it only happens one time and there's no guarantee. It might only be a 40% retrace. Goes to 8,000, right? And it goes back to 6,800, only goes down 3,200. That's still big, but it's not done. It's got a long way to go. And then it blows off. Well, this is exactly what we did in the 2011. Now, you're not seeing it on this chart at the same level, but I can tell you what the numbers were, right? So gold opened up, and as I played the cycle, gold in 2001 was about $250 after having been $850 in 1980. So it's 250, it's flat, it starts moving. 300, 400, 500, 600. By 2007 going into 2008 it was $1,000. Little bit over. The mortgage crisis hit, went down to $700. It dropped 30%. Some of the gold and silver stocks went down 50, 60%. The stock market went down pretty hard. Layoffs were happening. So that mortgage crisis was pretty ugly. Bail out the banks. And then ever since that, and then what happened? About a year later, everybody said, hey, I threw the baby out with the bathwater. We got a massive injection of QE and all that money. It stimulated everything. And then people are like, well, goes right back to 1,000, goes 1,300. We shouldn't even have sold the gold stock. Shouldn't have gone down 60 and 80%. They were making money at 1,000 gold. So off we flew to the final wave 5 peak. So from that 1,000 to 700, within 2.5 years, it was 1,900. Same thing happened in the 74 to 76 and went to 176. And by late 1979, going into January of 80, gold was 850. That is the biggest bull market we've ever had. That doesn't even tell you about the Hunt brothers on silver, because silver is a late mover. Gold moves first, then silver moves. Then they both maybe retrace and go flat. Gold moves again. Silver massively moves. So at the very final blow off top, silver is going crazy. Well, we're only at a 50 to 1 ratio right now. I think we get to 10 to 1. We only got to 30 to 1 in the 2011 peak, but we're rhyming and mimicking much closer to the 70s peak. And I'm going to show you some chart 80 peak, the 70 decade. So our DNA, our look is much closer to the 1970 to 1980 bull market. So let's take a further dive in here, guys. So 150, the only thing that's different is we overlaid the current gold price. And so when you think about how it moved, now again, gold was fixed back in these times. This is going all the way back to 1855. So it's kind of ridiculous, but it's there, right? So this stuff doesn't matter. Gold wasn't free floating. Once Nixon took us off the gold standard, and now we weren't backing the money with gold, look out below. The dollar value, look out below. Look above for gold. So this is the 70 to 80 run. And so what was happening, gold was outperforming the S&P. And the same thing back here happened in the 2001 to 2011. But look how small it was. Now we're mimicking and rhyming this. Maybe not quite as explosive, I'll show you, but a lot more explosive than this scenario. So we've got this thing, you know, can just go crazy. That's why we may go up a few more years, hit 10,000, go sideways for a few years, then go 20, 30, 40. I don't know if I want to live in a world when gold's 40 or 50,000, because that tells me that our debt levels are massive, tells me inflation is rampant, a lot of ugly things associated with that. That's why gold is a store of wealth for thousands and thousands a year. Bitcoin is a tech stock, unfortunately. I'm hoping it changes. It was touted as a store of wealth, limit availability. Let's see. Not acting like it's acting like a tech stock. I didn't even bother to show you the chart because it's ugly. Gold, gold yesterday, guys, yesterday was 12% up versus Bitcoin. So I didn't even bother to show you the chart. I just anger because there's a lot of Bitcoin followers. I'm not here to knock Bitcoin itself, but I am telling you it needs to wake up and perform and stop acting like a tech stock. If that's truly what it is, if it's, a digital gold or a value, which it's been labeled and I was tending to believe. We've never had a bull. We've never been in a commodity super cycle when Bitcoin was there. Gold bugs and everybody have been very concerned. Nobody's going to buy gold. We're never going to have another commodity super cycle because the young generation and everybody are into Bitcoin. And I was like, okay, maybe I got to accept that it's digital gold. But now I know better. Shame on me for even doubting it. So here's gold versus the tech sector. What do you see? Look at the same kind of thing. This 6-year pattern, and now we've broken out. This is a weekly chart, guys. And this thing can go and go and go. And it just means, where do you want your money? Do you want to go where your money is treated best? Okay. Or do you want to keep doing what you're doing and it changes? But you don't find out it's changed until you take a lot of losses, right? Do you know how many people come into my Patreon and go, "Hey, I believed all that stuff about, retire on Misty." And I just kept doing it and doing it and doing. A lot of those people were the ones buying it at 32. I'm watching it go to 6. And I know it's done a reverse split and all that. Guys, I keep up. I just don't report on it. I don't care. It's not the way to make money. It was fantastic for a year and a half. Michael Saylor was the talk of the town, Bitcoin, MicroStrategy. I've been saying for a year that you're better off in underlying Bitcoin funds. Right now, I don't care. Why would I put my money over there? Now, if it shows me it's going to break out to it, goes to 140 and it looks like it's going to go to 250, I might get interested, right? Because I'm opening up to some non-commodity super cycle, but not much, just enough to be balanced. I got some pharmas. I got some general retail. I got some Chinese tech stocks. So it's all, guys, two things about stock selection. You need to know fundamentals. Fundamentals tell me what to buy. Most people don't even understand commodity super cycle. You know, do they say, hey, the world's changing. I need to invest in commodities. Is this the decade that's going to outperform? No. They say, oh, you need to be in this stock. You need to be in that stock. They don't look at massive sectors. Then even within that, some of the crypto people I think do, because you go into crypto and you go, okay, I'm in BTC. Now it's altcoins. Okay, now it's Ethereum. Now it's XRP. It's Solana, right? And sometimes there's in groups. I get it. And what happens in the metals and the miners, it goes from first gold moves, then the big cap gold miners move because all the institutional money can buy them. They're not on the OTC, some NASDAQ, a lot of New York Stock Exchange, big names that they've seen and known, and they buy them. And then they start to move up. Nothing else has in that sector. And even today, with all these explosive 100, 200, 300, 400% returns on some of the miners, we're priced as if gold's 2,800, not 4,800. We're priced at silver at $40, not at $90. So if silver stayed at 70 for 3 more years, most of these silver miners would print money like massively. You understand, again, I always say this, everybody understand blue sky, price discovery. You know what that means? Why are there resistance levels on things? You can do technical analysis, right? Resistance level here, right? Pretty every time it's here. This was some resistance here. Had a little bit of resistance here. It couldn't break through, so it kept on going down. Resistance couldn't break through, kept on going down. Now it's changed. It went up here. It couldn't go any higher. Pull back, not below here. Went up here. Now you got major resistance. That's a big deal when you break out. I did it on, it's on a weekly. When it hits on a monthly or one more week, you've confirmed. So you set your trajectory. The speed and all that can vary, but you know where the direction is. So blue sky, guys, means silver's in a blue sky world. Gold's in a blue sky world. There aren't people that bought silver at 104 that as soon as we get to 104 is going to dump it because they bought it 3 years ago at 104 and they've been losing money. And then when it gets to 104, what do you guys do? Psychologically, I'm getting out. This sucks. I've been here for 3 years. Well, that isn't the case. You might have bought silver at 95 2 days ago. And then if it rides back to 60, 95 will be a massive resistance because there will be lots of people that bought it at 80 and 90 and high 70s, and it goes to 60. So that's what we mean by blue sky and price discovery. So remember that. And that's why there are all the technical analysis and wave structures and patterns and RSIs, and they matter, but they don't tell you what to buy. They tell me when to buy. I know what to buy because I've studied cycles, I study civilization, I study history, I study patterns. So I know when something is likely to happen and I follow it. And then the technical analysis, the deep dive, tells me, hey, here's two pharma companies. They've got competing products, one and two. One has a terrific pattern. It's entering an impulse. Its RSI is set. It's in a wave three, which is a massive up wave. That's the farm I want to buy. Even if they're number two now, they're going to be number one because their chart is indicating massive growth. And the number one, it's a great pharma company. Their product is in a terminal wave five. It's got 20% higher, and then it's very likely to retrace over 2 years, an A down, a B back up to where it was, and a C deeper. So, again, what do you buy? Fundamentals. Which one? When is technicals? You can have two gold miners and be very similar. One's going to be flat to slightly up in the bull market. Another is set to rip. So, guys, it's that kind of stuff that I also do, trying to help people. All right. So here's gold versus the Mag 7. You got all of the times it came up, right? And just couldn't get there lately. Here's silver. Yeah. Do you think silver's broken out against the stock market in the Mag 7? I'd say so. But silver had no other asset on earth that has any value that I'm aware of isn't higher than its 1980 level. And that was true for silver until a few months ago. I just did something in my Patreon. I showed the last 3 month performance of silver. It's amazing. And it's not done. We may get a heck of a retrace. If it goes to 120, I think we go back to 80, could go to 70, might go to 60. I doubt it. I really doubt it. I don't think we ever go below 50 again. I say ever is a long time, but not while I'm living. Probably not when you're living. How about the stock market? So I put GDX. Now, what is GDX and what is GDXJ? They overlap about 70%. They're mid to large cap gold and silver miners. Institutional money buys this, retail public buys this. This is broken out. Big breakout, right? This always leads to much, much higher levels. Look at this. This is where GD. That's why I say, even though gold is 4,800 and gold was 1,900 here, this is, so cheap on the scheme of things. They're not cheap in how high they've run. They could pull back 20 or 30%. But guys, I say if the Nasdaq does that, if the Nasdaq creates it, and I'm going to show you the Nvidia chart, and gold and silver aren't immune to it. So if the stock market, we're at the highest record of margin use in the history of the stock market. If we have a 5% pullback and it's going to go then to 8%, it all happens in 2 days, you're going to trigger a lot of margin calls. And if anybody owns one gold stock and 20 tech stock, they're going to sell it all. And so gold and silver miners go down. The metal goes down, not as much as the miners do. People that own physical, I own physical, I own a hell of a lot of miners too, because in the commodity super cycle, they have leverage to the metal. But I sleep well at night with the metal, both metals, because nobody can take it. There's no counterparty risk. And so it's a different side of things. And the shortage is in the physical silver. And that third paradigm shift to that shortage is what makes this time different. Everybody always says, what's that? A parabola, blow off top. You look at anything from tulips in history to Bitcoin or anything, they have massive straight up vertical runs. They always retrace. But the question is that the final blow off top? Certainly not in silver. So if we go to 120, we probably still have 180 after that, but we may go back to 70 or 80. But those are just buying opportunities. Just like now, we hit 79 a few weeks ago, slam back to 71. They were trying to paper short it and do all those tricks, but there's just too much demand for the physical. So the Samsungs and the Teslas and the First Solars were standing for delivery. So they can't keep shorting it if there's buyers. They can raise the margin, but that's the little guys. I think Samsung can handle it. I think Tesla can handle it. I think First Solar can handle it. They got money. They need the metal. And if the COMEX keeps playing games, they'll just bypass them, which they're starting to do. They go directly to the silver miners, say, we'll buy your next 2 years' supply. And we'll give you a spot plus a premium. And we're not going to lock you to the current spot, whatever, a floating spot. Silver goes down, you give us a better deal. Silver goes up, we pay more. That's what happens in miner in the real world. All right, guys. So this GoX, I like this. There's a user X, there's GoX. They're just alternatives for GDX. But, this is a much more liquid name. But this is a good one. Well, it's broken out. This one's broken out. The only one that hasn't is GDXJ because it's 70% the same as GDX, even though it's supposed to be juniors. Well, it has smaller companies, but it's still got some of the big guys and a lot of the mid cap guys. It's just got some more of the smaller ones. So it is, and that there's times it runs, but that's the typical rotation within the cycle. Institutional money comes in, they buy gold. Central banks buy gold. Then institutional money for stocks, and I should clarify, institutional money very little buys physical gold. Central banks do. Institutional money, when they see it, they're not stupid. They go in and they buy the biggest names, the Newmonts and the Barracks and the Anikio Eagles and the Ashantis and Ken Ross and Goldfields and Harmony and I could rattle more, bore you. But they're the large cap majors, top 10, 12 gold mining and silver mining companies in the world. And then you have some more silver focused, your Pan Americans and your Heclas and your Coors. That's when they want to buy a silver miner, that's who they go buy. Those names have been around for a hell of a long time, especially Hecla and Coor. But that only lasts for a while. Then people come in and say, wait a minute, the mid caps are undervalued. And the big guys want to gobble them up. They need more ounces and they don't want to go out and drill. They just want to focus on production. But they have mine lives. You run out of it, right? A mine can be 5 years, 9 years, and you're mining it, and that resource gets mined up. And you got to constantly be replacing that. Think about eating. You got a refrigerator, maybe you got a freezer, maybe you store some canned goods. So can you just stop going to the grocery store? No. And so a miner can't stop. And so they buy companies, but they're really smart ones with good inside ownership and a strong balance sheet that are exploring and developing and shoring up a resource can get the loan. They're saying, no, we don't want to sell out for 1.5 times value. We built this thing to be billionaires, millionaire, multimillionaire. We're in it for the long haul. And you have to separate the wheat from the chaff. So that's some more technical and some more analysis that I do when I come up with my top 25 gold and silver miners with the most explosive upside over the next 4 to 5 years. Sure, I can give you large cap names, but you can go look at those. Anybody can see a list of the large cap miners. I rattled off a bunch of names. And there's excellent ones, and I have a propensity more for some than others because I like the management team. And those will probably be 3 and 4x over the life cycle, but they're not going to be the 10 and 20 baggers. You got to do a lot of research. And then, even then, if I come up with 20, I better give you 20 because the reality is some are going to be a 3 or 4 bagger, some are going to be a 20, some are going to be a 10. If you try to pick them, and even when I try to pick them, I'm not always right. But at least I eliminated the duds, the moose pasture, the CEO and, standing over a hole in the ground, smoking a cigar with a sign that says I'm a liar. a Bre-X or something like that. He never had any mineralization. Him and his buddies form a company, and they call it, Hurrah Silver, and they start selling shares, and everybody gobbles it up and said, "Man, that thing is undervalued." Well, yeah, it's undervalued because they don't have any silver. They never will find any silver. It's moose pasture only. And some of those will go high, but they'll also crash because people will realize it's a con game. I have 860 miners in my database. I scrub it all the time. I look for who's moving and why are they moving. So there's some good analysts out there, the people that understand this stuff. But you got to do everything. And then you got to understand where the money is flowing and how it changes. And when do the base metals take off? And when do the rare earth metals take off? All of those things are happening simultaneous, but they have different movements, different velocities of money coming in. If you don't know and understand this industry, hello, you're going to wake up too late. That's what I do on Patreon, guys. That's the value add that I give. I've had people come in there for 1 month and they're like, "Oh, okay. I know what your list is. I'm going to go back and now and listen to Rick Rule out there." You think Rick Rule's he's a bright guy. I love Rick Rule, but he's running around at all the trade shows and promoting and helping, and he's retired. He's made millions and millions. He'll keep making money. He'll give you a little snippet or two. He knows the six wealthiest mining family companies that run everything. So he gets inside information. He's not going to give that to you. He doesn't need to. So again, it's just there's a lot of jargon. There's a lot of come lately YouTubers, right? I've been doing this stuff. I did it to retire in the 2000 decade. I'm here to do it again. I've been doing options and stock market for 45 years. I made a lot of mistakes. I overstayed in the tech sector in the dot-com bubble, and I had 18 years experience in the stock market. It wasn't my profession, but I learned a hell of a lot after that, and I never made that mistake again. And it led me to understanding the commodity super cycle. So it's all about learning. It's all about having failed. Next time you listen to a YouTuber telling you to buy something, ask yourself, is he running an infomercial? Is there something in it for him? There always is. Even some good YouTubers that I see, they need to stop running all the infomercials and the promo. People ask me, I'm not telling people where to store their gold in my favorite vault. I don't want a part of that. I want to focus on what I need to do to help somebody. It's me. People know I'm honest. I'm going to tell you the truth. I don't care about the YouTube side of it. That's why I'm not 30, 40, or be 100,000. I don't care. I just want to help people and I want to point out what's going on. You get on Patreon and you'll learn a lot, guys. I do a few of these now, like I'm doing. These are general, but I'm not going to give away all the good stuff. It's behind the paywall. I owe that to the group there. All right, guys, finish up. Final rant. I'm just not capable of not doing it. Most everybody loves it. I remember that young people would come in and they're like, "Would you just get to the point? Tell me what Nvidia is going to pay next week. Just get to the point." Because everybody's fast paced. But if you don't stop and learn something, there's nothing for free. Nobody's going to give you a 90% dividend yield for the next 30 years by listening to one YouTuber. It's constantly restudying. It's constantly analyzing, guys. You got to follow somebody that knows what they're talking about and not somebody that just wants your likes and views because they're making a living. It's a new way to make a living. Jobs are hard. All right, guys. So I've said this before. So goes Nvidia, likely so goes the market. So when we talk about levels, this is a deep dive at a technical level. We've got a wedge formation. We've also got some Elliott wave analysis. I've got this wave 3, very likely a 4. into a 5. Are we there already? Do we have more? Do we get a full 1 extension to 229? You know, when do we hit that? Do we go all the way to April? I don't know. I can tell you right now, if we break this line, look at this. If we break this over the next week or so, these are some retracement levels. Where are we at right now? 184. So look at this, 382 retrace, 131, 50% Fibonacci retracement, 106, a 6182, right? And you almost think if this truly is a 5, this is an A, B, C, right? So these are levels. If this bears out, this is an A, likely get a B and a C. So what does that say about the stock market if his Nvidia is the leader? I hope I'm wrong. I hope it runs to 500. But do I really think that's going to happen? No. And if it does, then gold's probably 30,000 in 3 years. So, guys, you need to think about those kinds of things. And so here's some contact info. There's my Patreon. For some reason, this flips. The TWC stands for my targeted wealth creation that I label my YouTube channel. And the 100 is just, so it's not TWC. But once in a while, when people go out there, they got to search and just use the TWC. I can't for the life of me figure out why most of the time it's TWC 100. And I initially said it's just TWC because on my Patreon channel it has TWC. Then underneath that it has TWC 100. So just FYI, if this doesn't take you to it, take the 100 off and you'll get there. Sometimes both work. Here's my email. Why do I put that on there? Because sometimes people have a question. Bruce, I'd like to join Patreon, or I'd like a consulting call, for you to talk to me and tell, here's my problem, here's where I'm at. Because I can't really help you if I don't understand. It's a two-way street. If you send me an email and say, do you think I should sell MIST? Do you think I should sell this? Should I sell AMD? Should I sell, GDXY and buy something else? Then, I need to know a little bit about you. What's your age? What's your background? What's your investing capital? To give any kind of a semblance of what I might do in that situation. Again, at the end of the day, it's always up to you. I'm not a professional financial advisor. But I do this a lot to help people, to give them some sense. Sometimes people are just lost. They went into this high yield stuff thinking they were going to make a ton of money, and they did for a month or two. And then they find out they're down 40, 50, 60% on their NAV. And they go, oh, all those payments didn't matter. It's like you giving me 10,000 and I hand you back 1,000 a month for 6 months. And then I say, I don't have any more money. So you just lost 40% of your capital. So happy to help, guys. You can always email me. I'm in the process of updating my prices. They're going to be a lot higher. I'm not saying that to drive people to it and quickly subscribe. I don't care. I'm just saying, even if you do that, the ensuing months are going to be higher than they are now. It's not going to stay that low, but I will offer an annual discount. And I'm going to grandfather in with some discounts some of my longer term Patreons now. All right, guys, that's what I got. I'm trying to think if there was something that I wanted to go over in more depth on one of these. Let me just take a quick look. I think that takes care of it. All right, guys, have a good one. We got hour and a half till the markets open. All right. Happy trading, happy investing. Have a good Friday. You have a good Thursday and a great weekend, guys. All right. Bye for now.